Morning, guys. I know this one's a quick update, even for me, based on yesterday's update or the day before, whenever it was. Um, Obviously, I've been a while since I've been doing these streams. I've actually been renovating a new house, and if I'm honest, there hasn't really been that much to talk about in the market. So, if you're a subscriber of ours on Discord, you might as well turn off now. You're going to know everything I'm about to say. These are all the kind of updates that I've given you guys over the last couple of months. If you're watching this on YouTube, this video is only going to be a short, kind of quick one, just kind of explaining some of the logic as to why we've done what we've done and why there hasn't really been any excitement or interest from us, myself and Paul, in terms of these particular moves. So, in essence, go back to September last year. We were calling the move from the 3 to the 4 as a pullback. We had this particular post was the license to thrill. And the idea for this was once we get the pullback, we are in the situation that we could take the long, right? Now, personally for me, I didn't like the risk factor from the 4 to the 5 and the 4 to the 2, where I would have ultimately put the stop loss. Okay, so this wasn't an interesting factor. However, what was interesting was when you look at the levels that we were seeing at this particular point. Once we had the 4 in, we could work out the truncated 5 that was due to occur. Okay. Now, this was ultimately a private idea posted just to the group at the time. So you can see what we were looking at. We called the top, we were calling the bottoms, and then ultimately we were looking at this pullback 4 up to 5 and kind of finishing off at the 5. Now, the 5 for me was the weekly 5, monthly 3. Okay. So just press play. We had the 4, the 5 truncated. Okay. Now, on the chart, you'll actually see if I come across to a year in the life of Bitcoin, you can actually see from what we were talking about all of last year, right? These value areas, it was this particular one that we were seeing up and around the top prior to where we've just come from. Okay. So this particular move, before this was this move over here. And again, this was the top, from the bottom, and then ultimately off we go. Okay, so the top there, we were looking at this as an extension and where we were likely to go, why we were likely to go, 3 to 4, up to 5, right? And that then would give us another schematic that we'd be looking to see, right? Which in essence was only a Wyckoff schematic, as we've explained nearly a year ago, right? We're 9 days off this particular year. Okay, now the sell me now indicator was showing the signs at each of the tops ready to go for the drops. And this was actually part of why we were looking at the distribution, right? The same this time round as last year. Okay. We had the same kind of calls. It was, oh, you're wrong. Oh, this is going to happen. Ah, we go into a moon. Ah, we got 100K coming in. Moon Carl have said 6 million. You know, no, guys, this is becoming more and more professionalized. This is becoming more and more institutionalized. And this is something that you need to understand when trading any kind of instrument, let alone Bitcoin, right? So for me, there's a lot of interesting things kind of starting to play themselves out. It's taken quite a long time to get there, but you have to realize we are actually in this monthly 3 to 4 move. Okay. So I've explained this, especially in this particular post. If you go through this, this is the year in the life of Bitcoin. You'll actually see a lot of information sat in here, including things like the value areas and the cluster zones. So we go back again, 30th September, we can see the cluster zone, this particular gray bar being the liquidity high, this one being the liquidity low. And you'll see how useful these become later on in the chart. Okay, so I'm just going to flick through some of these. You see the price comes up, we tag it, and ultimately move away for it, right? This is where the value area has now been created, right? So we have liquidity above, we have liquidity below, and therefore we're going to go searching for the liquidity on the side of the smart money, the big money, the institutional players, right? Now, I've covered, like I said, loads of this, and there's loads of this free available as well, online. I've put a lot of this onto TradingView. Let me just fast forward into some of this. Talked about the schematics. Look, why, how, what you're looking for within these schematics. just going to put this forward and press pause when I see. So on this particular video, I was overlaying the chart as to how, why, what, where exactly we were on the particular moves, right? So as you can see, I've circled the tops, circled the bottoms, right? And you'll understand that I'm creating the range based on the moves, right? Now, again, part of the reason why this wasn't interesting for myself or Paul in the move down from the new all-time high was we were talking about exactly this back in November, right? Wednesday, November the 3rd, 2021, right? We were talking about the moves. We were looking at the distribution schematic, why it was this distribution schematic, and where we were likely to go from there, right? These are a couple of other posts, a couple of other bits and pieces, other instruments, and so on and so on. This particular one, again, you can see still November, talking about the top hats, why we were likely to do what we were doing. So this goes on and follows on from the conversation we were having in August about why these levels, why the distribution, why the Wyckoff schematics were kind of key. You can see what we were doing with the levels, why we were doing the levels. This move up, the buyer's climax, then the UTAD, or UT on this particular instance, and then ultimately down we were going. So there's been really nothing surprising in any of these moves, right? We then started to forecast. I'm just going to find the next one. We've just started to forecast, I think it was this one here, where we were going from the move down. So this was the first ABC move of the A in terms of the bigger picture. We then had the point and figure chart. This one here. So this again, December the 6th. We were talking about why the value range and where we were likely to come back into this range. Okay. Let's flick through again. A couple of other bits and pieces. So in essence, I just wanted to kind of highlight today, why we've done what we've done, why we've said what we've said, and why it's just not interesting at the moment, right? So the reason I wanted to do this update was more, I guess, just to highlight the questions that I get after doing a video, specifically, is that, why this, why that, why the other? And ultimately, this is why we teach him what we teach, right? It's very difficult to find the balancing point in terms of what you give away, what you actually retain for the paying subscribers. And ultimately, the biggest challenge of all is you get a lot of people wanting buy and sell signals rather than to understand in depth how to do this for themselves. So we've tried to give more of the educational content, and even within the channel, within the subsection, we've actually tried to let people think for themselves and ultimately give a few of the ideas, give a few of the calls and the logic behind it, and then break down why we see in what we see in rather than what we see in this buy now. Okay. So going back again, point and figure, this was now in February. You can see we were tapped in the areas, and we're now starting to create an accumulation phase within this. Now, the accumulation for me is still only part of the bigger A, which means we're likely to get then the B move up. Now, again, maybe a big misconception for many people is that the C could be deep, right? And it could. It could take us all the way down to 19K and still keep us in with the actual count, right? Question is it going to get there, right? And again, there's logic and reasons both ways as to yes, it could, and no, it won't. And this comes back to the clustering levels as to where we are and what we do now from here. Okay, so this is ultimately what I wanted to share this morning. I've covered obviously things like this, the year in the life of Bitcoin. There's a lot of information in this if you haven't already gone through it. This video was the Bitcoin facts May the 11th in my trading view profile. Wyckoff, this was just more to show, what we were looking at kind of back then, why it's kind of key and crucial at the kind of times that we were looking at. This one was just looking at why we had the truncated 5 and what we'd expect to see after that truncated 5. And then obviously through the channel, what we've actually seen, why we've seen what we've seen, and what we're looking at, where potentially we go next, why this isn't the spring, why this isn't really interesting just yet. Let's have a quick look on the Bitcoin chart. So yeah, so in essence, we've got a liquidity grab down low potentially. I'd like to see something like this as my current A count. Right, into the liquidity. And then I think we've got a nice B before coming back for a C. So I'm not going to cover anything else in terms of the chart or working this out, why you'd expect the bottom, where you'd expect the bottom, etc., etc. That's something I'm going to keep specifically for the subscribers. But in essence, this is what we're seeing. This is why only now it's starting to become a little bit intriguing in terms of what and where we go next. Okay, so I know this one's more of a ramble, but I just wanted to highlight that, whatever the questions are, for me personally, this isn't, a do or die moment right now. This is still, it's coming, it's working itself out, it'll iron itself out, and then we'll start to put more information in terms of why and where we're going, where we go next. Okay, so my apologies if I don't come back to you in terms of questions. Like I said at the start of the video, I'm currently renovating the house and I'm away from the charts. But more importantly, I don't feel we're doing that much that we haven't already forecasted. Back last year, we were looking at this move, truncated 5, as far back as August. We were talking about why the zigzag pattern and the distribution in terms of the Wyckoff would occur, knowing that we were having a zigzag 5 move, where we were for the redistribution on the recent move down from the D to my current E. Nothing's been exciting, nothing's been interesting, and nothing's done anything that we haven't already forecasted. So I'm going to leave this video like that, and I'll probably do another one in the next couple of days, depending on what price action actually gives us to talk about. So enjoy the rest of the week. Cheers for watching, guys.